an exclusive interview with Voyager, and I'm going to introduce Craig Salm from Grayscale, and he'll be talking to Steve Ehrlich, the CEO of Voyager. There's Craig. Craig, how we doing? And let's get Steve on here as well.
How are you?
We got Craig. We got Steve. Everyone is here. How are we both doing today?
All good. Crappy weather in New York, but all good.
So I hear. I hope it clears up because I'll be there in a couple of days. All right, I'm going to see my way out and let Craig take the floor here.
All right, thank you, Spencer. So hello, everyone. My name is Craig Salm. I head up legal at Grayscale Investments. Grayscale is the world's largest digital currency asset manager. We manage about $40 billion across a family of 15 different investment products. And our mission is really to provide access and exposure to the digital currency asset class in the form of a security. I'm joined here today by Steve Ehrlich, CEO of Voyager Digital, a very popular cryptocurrency trading platform. And let Steve further introduce yourself.
Thanks, Craig. Yeah, happy to be here today. Thank the Benzinga staff for including us again. Always appreciate that. But Voyager is the leading agency brokerage in North America, focused on creating wealth for retail consumers through the digital asset ecosystem. Today we have over 60 different coins on the platform, and more than half of them allow you to earn rewards on an annual basis, paid out monthly, so that you can create wealth through this digital asset ecosystem. We've grown quite a bit. Public company, traded on the CSE. Happy to say that believe next week that we will be on the Toronto Stock Exchange, and we're also on the OTC markets with a goal to get to NASDAQ. So and join you guys there. So we're happy to get there, and just a growth business, and looking forward to our conversation here.
Awesome, likewise. So, Steve, I think one of the more popular acronyms we hear a lot about today, other than NFTs, is ETFs. Every couple of years we go through these sessions where the likelihood seems very high and people get very excited. And historically, we've been let down. But this year, there have been comments about the likelihood, and we're hearing, some sentiments from the SEC, the U.S. regulator that approves these types of products, that maybe they're at a place where they are ready to allow this type of vehicle to be listed and accessible to retail and other types of investors. But I think to start, it'd be good for us to sort of break down what an ETF is and why investors find it to be useful. Your firm provides exposure to cryptocurrencies through the spot physical cryptocurrencies. My firm at Grayscale has products that are more structured vehicles, not quite ETFs, but we're trying to get there. So I think to start, why don't we break down what an ETF really is?
I think we that is we slightly differ in our products and so forth, but I think the ETF, the exchange traded fund, allows people that exposure without having to actually go buy the spot, just like we have in the gold market today, right. That you can go buy the ETF. And it is the ETFs that are being discussed are tracking the most popular one is the tracking of Bitcoin, and the Bitcoin price is the ETF. And I think that is important for that evolution of the marketplace too, because there are a lot of people that just don't have that comfort level yet in buying the spot market. Plus, investment advisors really can't put their customers into products into the spot today, and we all see a lot of that, and we get a lot of inbound on that. But I think that's what you started to talk about here is that ETF market, that exchange traded fund, that people get to participate in the Bitcoin market or other assets without having to buy the spot.
Yeah, I think that's exactly right. I like to think of ETFs as sort of a mutual fund plus a stock. It's like a mutual fund because it's a structured vehicle that allows you to invest in an asset or a basket of assets with a manager that allows you to buy in at a set price and then sell at a set price. But one of the issues there is that you can't really get in and out of your investment at any time throughout the trading day like you can with a stock. So with a stock, you can buy and sell anytime. And with an ETF, it's like a mutual fund because it gives that exposure, but it's also like a stock because you can sell it at any time throughout the trading day. And one of the really interesting things about that mechanic is it really just allows access for all types of investors, institutional, retail, on an exchange.
Yeah, and I think it's a really, it's hopeful that it comes out. as you alluded to, there's, Commissioner Gensler has talked about an ETF when it comes to the, backed by futures, which I kind of don't really get yet. I understand the spot side, and I think you and I are in agreement on this one where, there could be a really good evolution for more adoption of Bitcoin and cryptocurrencies, but I'm missing the point where it says, like, let's do it off the futures and the futures pricing, because the underlying pricing is still driving the futures pricing. So
Right.
Why not just go straight to the spot market and do it that way, and start with the ETF, which probably is sometime in 22, although the futures might come in 21 here, but the spot in 22.
Yeah, and just to dive in a little bit deeper on the historical context of where we've seen the ETFs come since as early as 2017 to today. Grayscale has been very much involved in that process since 2017. We're 100% committed to converting, our Grayscale Bitcoin Trust, which is a publicly traded Bitcoin trust, largest in the world, to an ETF eventually when permitted by the regulatory environment. So we've been very much involved in that process. And I think the SEC has been very clear about what they've wanted to see to get comfortable with this type of product that would be available to all types of investors. And again, the SEC is very focused on investor protection. So that's really their primary focus when approving any of these types of products. And to date, they've been very clear that what they would like to see is development in the underlying Bitcoin markets that's similar to what you see in other developed markets where you have trade surveillance, guardrails, protections, preventing things like manipulation or potential fraud. And if you can't prevent it, then you can detect it when it happens and then prosecute it and things like that. And I really think that's simply a matter of when, not if, and it's just going to take time. So, the statements from the chairman recently about being excited to see filings where the product holds Bitcoin futures versus Bitcoin spot, I think is just a good development, showing regulatory engagement, that they're looking at these applications, trying to see where they can implement appropriate investor protections, while also allowing investors to gain access to what we both agree is a very exciting asset class with a lot of potential.
Yeah, I think, it's the starting of the regulation, and you and I, talked offline. When you start thinking about regulation related to crypto, the SEC is really focused on customer protection, which is great. But because when you start digging into regulation and you start digging into what it means, when you hear the comments about, security tokens and what all that means, you and I were going through that the other day. It's like the vast number of things that have to be put in place when you say that is so broad. And I think the ETFs and the futures, good place to start. But we need this whole framework around crypto. And especially when the comment about a security, I think Commissioner Gensler said, like, everything is a security. But then, okay, give me the framework where that works in, because we have built rules that relate to the securities market, and they all come with customer protection rules. Those who are aware of 15C33 reserve rules. People have to then go in and take Series 7 tests to be able to sell that. And does that mean our Series 7 tests and all those regulations now got to get updated to include digital assets? How does the custody work? Because we have centralized custody in the securities and options world through NSCC and DTC. SIPC is a big one I like to throw out there when we talk about regulation, that securities are governed by SIPC. And I'm not sure some of the big brokerage houses and FINRA regulated firms are going to want to fund SIPC when it comes to digital assets as well. So there's a whole litany of items. And then last, obviously, but not least, is GAAP accounting for digital assets, because it's not consistent with what some of the comments that come out of the SEC. It's an inconsistency across that. So, and you guys are seeing a lot of that related to parties. It's just hard. That's right. It's a good start regulation wise.
Yeah, and I think all the points you're raising are reasons why, there's a certain class of investors that certainly would love to just buy their crypto, even mine their own crypto, store it on their private wallet, and handle all of those different features in terms of custody and reporting and accounting and tracking for capital gains and losses and things like that. But there is a whole other universe of investors that much more prefer to go to a central platform like Voyager, where it'll track your positions and report for you. Similarly, with Grayscale, we handle all of the custody and the reporting and the audited financial statements and disclosing all of these different facets about cryptocurrencies to our investors. And I think, the success of both Voyager and Grayscale goes to show that while regulators are getting comfortable with an ETF, which is certainly a very optimal and efficient way to invest in digital currencies, there's other ways investors are getting exposure, the Grayscale products, the Voyager platform, and things like that. And, I think our firms are really doing what we can to make these products as transparent, as regulated, as safe and secure for investors as possible. So in the meantime,
I think you hit a key point there. I think, our firms get aligned, we're significantly aligned in the fact of just bringing customer education, security, transparency to the markets, right? I mean, there's not that many of us that are public companies in this space that do bring that transparency to the consumer about everything we're doing. And, we all have publicly filed financial statements. And I think this really brings a point where we're already kind of self-regulating ourselves when it comes to bringing products to retail consumers and institutional consumers for that matter. We're bringing that transparency. We're doing all the proper, KYC that needs to be done. But there's not a lot of us that are, abiding by this extra set of public company rules that you get rather than just the traditional financial, money service business rules, FinCEN rules. And that's where I think where we started with was the oversight and the customer protection, and where the SEC sits. That's a really good area for them to focus on, is the KYC, the AML, and customer protection. And like I said, the two of us and one other, I think, are in this space and doing it at a really highly regulated level.
Yeah. I mean, I often say that I think regulators have a tough job, and I think that's especially the case for a new innovative technology like digital currencies, because they really do present new use cases, new innovations, but then also a new set of risks. And what's really important is that you come to the table in a thoughtful manner, acknowledging that this is new, but also has some of the same types of concerns that you want to protect against in the name of investor protection. And therefore, as policy and regulation is crafted, to really keep those things in mind. And I think we've definitely seen a lot of good engagement from US regulators as they want to become educated and learn more about this so that it can be regulated in the proper manner.
Yeah, I mean, I think it's where it's going, right? I think there's no doubt about it. We're leaning that way. We're heavily leaning that way. More could be done, obviously, and I think that's what the SEC is looking for. And I'd like to see a little bit more framework around the coins and some comments that come out of it to help us guide us there a little bit more. And I'm sure, if you turn back the clock 70 years when the original SEC rules were put in place, and was it the Act of 33 and Investors Act of 40 and all those, they were probably debating the same thing for years before they put things in place. And a lot of that came out of the Great Depression and the stock market crash of the late 20s. So you could see how long it took. So I go back and I look at those things, and then people tend to forget too that we didn't get to a commission market. I think it was in 1972 or 73 when all of a sudden there was commissions became free, meaning not free in that you didn't pay any, but it was an open market to charge whatever you wanted. There was a set commission market there. So that took years to happen. So the regulation itself, when it can't happen overnight because there's too much to learn, and you have to take all the past learnings with where we think the market's going in the future to really develop a proper regulatory structure for digital assets, because it's just not there. And I don't think we could take it and just put it into the existing rules. It just can't work because technology wasn't there when they were written almost 100 years ago.
Right. The technology didn't exist then. Digital assets certainly did not exist then. I think another really important feature is that markets were not as global and accessible as they are today. And within the cryptocurrency world, there is no single central, order book or marketplace like what you have with traditional securities. Apple trades on NASDAQ. Even gold has, very centralized markets in the US and the UK and Shanghai. So you talk more about how, given that cryptocurrency is so decentralized and distributed, there's no single, global marketplace. How does that impact or should impact regulation, things like surveillance, or the ways that different marketplaces like Voyager or others are sort of, interfacing with those different platforms?
Yeah, it's a really solid point. When you think about it, right? I mean, the equity markets in the States have the national best bid and offer. So as a retail consumer, when you're putting an order in through any online broker, you're supposed, based upon order size, you're supposed to get the national best bid or offer at that time when the order goes through. We don't have that consolidated tape or consolidated book in the crypto market, which drives a lot of more price discovery for people across the different marketplaces. Kind of why we fit into the mix is because we connect to those places and are looking at that and trying to get that price discovery to bring that back to the consumer. But as long as there's no NBBO, I think it's hard to put that structure in, in the US for that, because then what will happen is, we'll get back to the payment for order flow conversation, because I don't believe it's there yet in crypto. Clearly we don't get it, so I don't think it's there. And I don't really think that structure is there for almost all the players. If it's not going to be the brokers that can make, it's going to be the market makers that are going to have to pay for the order flow. And I don't think we want to go there either, because we see that coming under a lot of scrutiny as well. So I think that's one of the things that are going to cause a little bit longer to get a more full regulatory structure around the trading. But we do have surveillance, right? I think that's the other thing that's important here.
Right.
Is we're all using tools that allow us to manage and see the order flow to make sure it's related to different items like rush sales, etc. Just to make sure that it's actual trading going on and it's not trying to dupe the market, because we saw that happen 10 years ago in the equity market. There were companies that got in trouble for that. So we all have surveillance tools. I know we do surveillance tools to manage that as well. And I think those are just going to get better and better.
I think that's something that's not really appreciated, at least with respect to the US cryptocurrency markets, that, there's a view that potentially those marketplaces should be regulated more like a national securities exchange, like a New York Stock Exchange or NASDAQ, because of the protections that come with that. But at the same time, there is, as you mentioned earlier, self-regulation happening. And I think a lot of the market doesn't appreciate the fact that the types of trade surveillance tools being used by Voyager and the Coinbases and the Geminis of the world are the same tools being used by the NYSEs and the NASDAQs of the world. And so even without formal legislation around how cryptocurrency markets should be regulated, a lot of the same protections are still being put in place through self-regulation, which I think is really great and goes to show that despite a common misconception that the cryptocurrency world is anti-regulation and anti-establishment, there is a large prominent segment that really does want regulation and protections, to protect their consumers and their clients and their investors, while also allowing for the promises of Bitcoin and other cryptocurrencies to be fully realized.
100% accurate, I think, is that it definitely goes. I don't believe the general public, I don't believe everybody understands that we put ourselves through all this regulation. Now, there's a lot of rules that we have to abide by under FinCEN and money service business and so forth, but there's a whole other level of regulation we self-regulate ourselves on to make sure, and that's to make sure that our customers are protected and to make sure that we're protecting every customer in the way coins get traded. And it's a really important step. Again, as I mentioned, I hearken back to the equity world before there was any of these regulations. The higher quality brokerage firms back before there were regulation were doing these things anyway. And there are those in this industry that look for that extra because we want to give that comfort. Obviously, there's bad actors wherever you go, but there's a significant portion of us that are self-regulating that want to be, in a structure to satisfy customers and give them that transparency.
Yeah, I mean, absolutely. I can certainly speak to the Grayscale side. 7 years ago, we started with an unregistered investment vehicle only offered to accredited investors with our Grayscale Bitcoin Trust. After that, we obtained a public quotation under the ticker symbol GBTC, which is how a lot of investors come to know and learn about us. And that added, additional public company reporting on the over-the-counter markets. And then the most recent thing we've done in the last couple of years is seek something called SEC reporting status, which means that GBTC, the Bitcoin Trust, reports its disclosures and financial statements to the SEC and files things like 10Ks, 10Qs, subject to Sarbanes-Oxley. Really, those are all the types of things that you would normally see with any other publicly traded company, whether it's something like Apple or an ETF. And we really are doing that in the name of, raising our hand, wanting to go to regulators, become more regulated, more transparent, so that investors can come to expect the same protections with us as they do their other investments. And I think, as you were talking about what you're doing at Voyager, what we're doing here is really emblematic of that type of self-regulation, which I think is just, really great for the space, really great for adding legitimacy and credibility to this industry we work in.
Yeah, like I said earlier, there's three of us, I think, that are in the space as public companies, putting ourselves through that regulation, and whether it's the 10Ks, and we do it in Canada, the quarterlies that have to be filed and reviewed by auditors, and that's a lot of work, a lot of cost, a lot of work, but it keeps us focused on that transparency that we totally want and need in this space, and that's how we're going to drive more adoption. Retail, institutional, whether folks choose to do that in a ETF world, or they do it in the spot world, or do it in the trust world like you guys, any of those places, we just want more adoption, right? We just want more people entering this space, because both of us are in this business because we think we're changing the world. We think cryptocurrency is absolutely going to change, a lot about what's going to happen in more than financial services, and that's why we're here, and we just want to make it transparent.
All right. I think that's a great note to wrap this conversation up. Steve, thank you so much for your time. Great insights. And hopefully everyone enjoyed our little fireside chat.
Thank you both so much. One quick question for Steve. This is from the chat. Does Voyager allow business accounts?
We've started.
Okay.
You can send an email to institutional@investvoyager.com. And we started to accept small to mid-sized businesses because they want to get some rewards on their USDC and BTC.
All right. Craig Salm, Steve Ehrlich, thanks both of you so much for coming on today on the Benzinga Crypto Festival.
Thanks, guys.
Thanks, Spencer. Bye.